We just talked about the measurement principle. Now let's look at the revenue recognition principle. So the revenue recognition principle here is when a company agrees to perform a service or sell a product to the customer, it has a performance obligation, or in other words, an obligation to perform. And when the company satisfies this performance obligation, it recognizes revenue. So that's when we recognize revenue. We're going to talk more about it when we talk about revenue recognition upon the end of this course. Expense recognition principle, and the principle here is we let expense follow revenue. So if the cost has a direct relationship with revenue, we recognize in the period of revenue. For example, if the firm makes us sales, we need to recognize sales. At the same time, we recognize the associated cost of goods sold. However, if the cost does not have a direct relationship with revenue, we expense it as incurred. And then lastly, the disclosure concept. So the idea here is full disclosure. Any information useful to decision makers is required to be provided in financial statement, subject to cost effectiveness constraint. So just full disclosure, any information useful is required to be provided. But also we have this cost and effectiveness constraint. So now let's look at the exercise again. The second question on your handout, please take 5 minutes, try to work on this question on your own, and you can pause your video for now. The life of an enterprise can be divided into artificial time periods. What is a periodicity? Record expense in the period the related revenue is recognized. Expense recognition. The financial statements represent the business rather than its owners. Economic entity. In the absence of evidence to the contrary, the business can be reasonably expected to operate long enough to carry out its existing commitment. What is that? Going concern. Criteria usually satisfied for products at point of sale. Revenue recognition. Accounting measurement for US companies are reported in dollars, monetary unit. All information that could affect decisions should be reported. That's full disclosure. So this is about FASB's conceptual framework. And as you are probably seeing here that the FASB's conceptual framework are rather abstract, but it is also very fundamental throughout this course. A lot of the stuff we're going to talk about in this course, you can actually find this basis from the conceptual framework. So it's very basic, but at the same time, it's also very conceptual and abstract. So the purpose of going over it here is just to give you a rough idea of what those concepts are. Information should be relevant and faithfully representative. So those are ideas. And we're kind of going to link back to it when we go through each specific account in the future.